Today we're going to have a look at 6 different types of investors, and we're going to go into a bit more detail into each, the characteristics of each. Hopefully you can work out what kind of investor you'd like to be from it. Hi guys, welcome back to the channel. If you're new to the channel, make sure you go down and subscribe so you don't miss any future content as it comes out. And if you like the video, give it a little like. Wait until you've seen the whole thing, just so you know you definitely like it, and then give it a little like below. It'd be much appreciated. Today we're going to have a look at these 6 different types of investors. There were sort of 3 or 4 main ones, a couple of extra ones that I'm going to throw in there for good measure, and we're going to look at the characteristics of each one, and you might be able to decide what kind of investor you would like to be. I'm typically one of these, although I dabble in another one as well. In case you're wondering, the lighting isn't a bit off. That is actually a completely red neck because it was sunny today and I didn't put any suntan lotion on until it was too late. Anyway, so let's have a look at these investors. So I'm going to start off, we've got 6 to go through. I'm going to start off with the main ones. So I'm going to start off with the one that I would associate myself most with, which is a dividend investor. Now, a dividend investor, typically you're going to be getting into companies that pay reliable dividend, not necessarily a massive dividend or a massive yield, just a reliable dividend. You're going to typically look for a company that has had a number of consecutive years paying that dividend. And you could look at maybe aristocrats or kings, meaning they've paid the dividend for 25 or 50 years. That should see you get pretty reliable income, because dividend investors are typically looking at it for the income. Capital growth within that company would also be a huge benefit. The second one I'll look at is a growth investor. Now, typically you're going to look at companies that are in sectors that are pretty disruptive and growing and have huge upside potential. So you might look at the tech sector, renewable energy, cannabis, EV space, all growth sectors that are going to be taking over. Space travel, things like that, SpaceX. Something like Apple would have been a great growth stock, and actually Apple doubles up as a dividend stock as well, although it's a very small dividend yield. But growth stocks are typically ones that are in sectors that are going to do very well in the future. Value investors. Value investors are investors like Warren Buffett, Charlie Munger. They will find companies that are undervalued at that particular moment in time based on their intrinsic book value, looking at their PE ratios, looking at other metrics to value a company. They'll look at those and say, well, actually the share price doesn't reflect what it should be worth right now. Great time to get in. I'm going to buy in now and reap the rewards in the future. They would typically be kind of like the 3 main investors that you generally come across. There are a couple more though. So spec investors, high risk speculative investors, may look to invest in the likes of penny stocks where they're very volatile. They'll look at investing in companies that have got huge future growth, massive future growth, because of particular rumors or speculation that something is going to come up in the future. A catalyst is going to come out. A pharmaceutical company is going to get FDA approval for a drug. Any particular EV company is going to sign a huge deal with another company to get their cars on the road. Cannabis is something going to be legalized in an area, and you're going to get into a cannabis company because you think that's coming up and that's going to boost the stock. You typically invest a lot in penny stocks, maybe because of the volatility, and because any small catalyst, any small rumor that comes out with penny stocks has a huge, tremendous effect on the share price. These investors, they're like the rock stars of the investing world, you know, huge upside potential. Oh, look, I've just made 1,000% on this stock. Well done, but it's very high risk. Another couple lesser known types of investors would be maybe in the same sort of idea as a dividend investor looking for the income. You'd have income investors who would invest in kind of income indexes and income funds where a institution has put together an ETF with the sole goal of creating income for the buyers of the ETF. So you'd have something like the PIMCO Corporate Opportunity and Income Fund, ticker symbol PTY, humongous dividend yield, monthly payer, so you're getting your money monthly. They wouldn't focus on growth really. In fact, there's often not very much growth at all, capital growth, but you're buying into it simply for an income play. The yields are massive, so a safe yield for a dividend stock would be Procter & Gamble, 3-4%, whatever it might be. Something like PTY, I don't know what it's paying at the moment, but you're looking like 9% plus, 10, 11, 12, whatever it might be, and it's simply there as an income play. You just want the money coming in, usually on a monthly basis. The last one would be something like a seasonal investor. A seasonal investor is someone who would look at a stock and their stock's history, where a stock would do particularly well at a certain time of year, and then buy and sell either side of that time period. So a seasonal stock might be, I don't know, maybe a travel company for the summer, maybe a company that particularly deals in ski resorts or skiing, whatever it might be, and therefore the winters they're going to do very well. Holiday seasons, Christmas, Thanksgiving in the US maybe, and companies there will do particularly well at a certain time of the year, and seasonal investors would look to capitalize on the fluctuations in the share price based on the seasons and the good seasons and obviously the bad seasons for those particular companies. So there's 6 main ones. I don't think I've missed any off. I'm sure I probably have, and you can let me know if I have it in the comment section below. Let me know what kind of investor you are as well. Would love to hear from you. I personally am a dividend investor. I have a lot of dividend stocks and some income funds as well actually, and I have a very small high risk speculation investor portfolio in my Trading 212 account, which is a lot of penny stocks and a lot of just spec plays, SPACs and things like that. Very small portion of my portfolio is speculative. Much bigger chunk is dividend, maybe a tiny bit of growth, maybe a tiny bit of income, but the bulk of it is dividend, and that's the kind of investor I am. That's it for today's video, guys. You just listened to me ramble on for however long, but I do hope that that was useful to you. I'll continue to do portfolio updates so you can see my whole portfolio. It's speculative high risk portfolio, so you can see my whole portfolio there as well. And this of course is following on from a short that I've just done and got out, which tried to cram all of that into a minute. That is so hard. In fact, I filmed one of them, it was like 2 minutes long, didn't work. I had to break it down and just give you the main characteristics of each investor and throw it into a short. I like to ramble on. To get all that done in 1 minute is so hard. But I'm gonna try and get a shorter version of each video out there in a short as well, for 2 reasons. 1, helps you guys, hopefully, because then you'd have to watch the whole thing if you want an overview. But 2, YouTube are pushing out shorts at the moment. So for pure engagement and trying to grow the channel, let's get some shorts out there as well. So that's it for today's video, guys. Hope you enjoyed that, hope you liked, hope you subscribe and like and comment and all that good stuff, and we'll catch you guys in the next video. See you later.